Hi, this is Kerry Artak with Wicked Stocks bringing you an update in the IWM, that is the iShares Russell 2000 ETF small cap index. I did a video last week. I'm doing another one this week. I may make this a weekly element. I think it's important with the tariff situation, the fact that prolonged tariffs may impact small caps across the board more so than large caps. I did make the point in last week's video that the IWM, it has now as of last Friday, but up to that point, I think I put the video out Tuesday or Wednesday of last week, had yet to even retrace 3/8 of its losses from the November high of last year, the all-time high, against that recent April low, whereas the S&P 500 had yet to, or was in the process of, approaching its 5/8 retracement. And the S&P 500, or the SPY in this case, the S&P 500 Spider ETF, did actually push through, settle above both the former two-year channel bottom and a 5/8 Fibonacci last week, and closed above it, implying continued gains as we move through May and into June. This could be a 3 to 5 week move, could take the better part of 2 months, but I do see the very real possibility of reaching back into the 610s. I don't think it'll be an easy rally. I think there'll be challenges along the way given the environment we're in. There's also, for instance, in the SPY, this channel bottom here next week at 581.40. It's different on the daily chart. I do this analysis on a daily basis for wickedstocks.com. That's a subscription. So I invite you to actually take a look at that and take advantage of our 5-day free trial where you will have daily SPY analysis and these key levels. But I'm not doing SPY analysis here. This is the IWM, the Russell 2000. We did last week close just above this 3/8 Fibonacci. And we also did close, and this is kind of a zoomed in of the same exact chart. So you've got 197.67 here. And let me back up just a little bit to re-clarify that this is a monthly chart. This right here goes back to November of 20. So this is almost a 5-year structure in and of itself. And the point I made last week is that if the Russell 2000 falls back, and it may in the coming months, the next 3 to 5 months, I wouldn't be surprised to see the low to mid 160s. 164.48 is a 3/8 downside Fibonacci from that significant 2009 low, the banking implosion, the housing collapse. 161.93, though, is the most significant horizontal channel bottom, 5-year channel bottom, base of long-term support for the Russell 2000, able to contain annual lows if tested. And that is the downside. The upside, I'd mentioned, was a 3/8 upside Fibonacci resistance. We closed just above it. And I'm going to zoom in now on that same weekly chart and show a descending channel top that we also closed above last week. It was higher last week. It has dropped this week to 195.84. Now, as I speak, the S&P 500 E-mini futures are down by about 40 points right now, which probably means that the IWM will test Monday, the 195.84 channel top. And that is really what I'm focusing on. 199.67 is a symbolic level. We did close above it. Holding above 195.84, I do see the 5/8 Fibonacci BC, the November high against that April low, as a likely 3 to 5 week outcome. And that is still what I hold to above 195.84. So as long as we hold 195.84, and this descending 4 or 5 month channel top is pretty classic structure, able to contain selling pressures. This is a weekly chart through May, and above which 217 even remains a 3 to 5 week target, where I see the IWM running into trouble sustaining upward momentum as we move into the third quarter. But 195.84, significant pivot point this week. And if we break it, and let me just jump to the next chart. If we break 195.84, and this is opening it up even more, we have this well-defined channel bottom. And this is, if you were to put this on a daily chart, it is the same exact sequence. We opened low the week of Monday, April 7th. We put out our low early in the week, and we came back. And this was a relaxing of the tariff talk, if you will. The 90-day suspension by the Trump administration was the result of this rally. So you've got low, high, then we fell back a couple of weeks. You have a new high here, last week's high, 201.21. And this thus forms a new rising channel bottom. There's a 1 month structure. And so if we close below 195.84, and I think even a daily settlement this week below 195.84 will invite continued selling pressures that just might allow the 183.48 channel bottom. Now, in last week's video, I did mention, if you recall, the low settlement price of 181.19. That is still there. That actually held 3 weeks later. We put out the low settlement price. We put out a new low, and then we closed higher on the week, the following week, and then a couple weeks later it actually held nicely as a low. I don't see that as a significant pivot point anymore, 181.19. What I do see is the 183.48 rising channel bottom. And so if we close below 195.84 any day this week, you should allow for the possibility of 183.48 by Friday's close. If we close the week Friday below 195.84, I would expect 183.48 next week if we don't test it this week. So any daily or weekly settlement below 195.84 should yield 183.48 within a week or two, and it may require a Friday settlement this week below 195.84 to yield 183.48 within another full week of trade. This is a support level that can contain weekly selling pressures. We might even round out from here and back up as we move into later May. But 183.48 is also an important downside pivot point. If we were to close below 183.48, and it is climbing, next week, for instance, it's 186.52. As it climbs through time, and if we close below it, it does aggressively pivot the market south as we move into June. That 161.93 long-term channel bottom that I show here, actually, this is at 161.94. Let me change that. I'm kind of strange that way where I really want the exact number. So I'm going to type that out right now. 161.93 is the base of support. On the monthly chart, it is 161.93 for the entire month of May. They're just a tick apart. But this is our base of long-term support, as I've said. This is a 5-year structure, and I would expect us to visit it within a month or two of closing below 183.48. So that is the downside. But we did close above 195.84 last week. This does offer decent support for the week, buyable support. You can buy into a dip into the 195.84 area, and so long as we do not close below it on a daily basis, certainly a weekly basis, I still anticipate 217 even, possibly by the end of May, certainly by the end of June at the latest, where we can top out on a monthly basis, possibly longer. We'll just have to see what the economic tea leaves are showing at that time. If the tariffs go through, they are going to impact the economy to some extent. The question is, to what extent? I think that pretty much rounds it out. I'm going to leave it at that for this week's iShares Russell 2000. You have a great week.